Like we are live. Welcome everyone. It is the 14th of April 2021. This is question time. Excited to run through today's session. Heap of great information we've got. Very excited to be already well into the second quarter of 2021. That thing that we call Corona is becoming more and more of a distant memory. Of course, unless you are over 50 and you don't get to have the Pfizer vaccine. So Greg, I'm sorry, you have to still stick with the blood clotting one. The rest of us are still just under that marker, so we get the joy of having the new vaccine. So look, a lot of things that we want to go through today. I won't preempt too much, but for those of you that are brand new and haven't joined us before, welcome. I very much appreciate all of you dedicating your time to us today. I know there's a lot of things that you could be doing, so it's very much appreciated by all of us that you have joined us today. If you are on Facebook, it should just be live now, so welcome to you as well. Those of you that were live on Zoom and you saw me flipping about or wondering why I was just going on about not too much, it's because I was also trying to make it live on Facebook. All right, so now that I know we are live everywhere, Lucas, give me a thumbs up. Everything sounds been coming through okay? Great. All right, so as I said, I want to just run through a couple of key themes that we've seen this week. So, Greg's going to run through really interesting and different sort of perspective on the housing market. Everyone would know, if you've been joining in week after week, you would know. If you haven't and you've been living under a rock, you should know that house prices have been going gangbusters all this year. So is housing become unaffordable? Greg's going to tell us it's actually very affordable. Home loan, fixed home loan rates, there is still time to lock in those rates. So those of you that have a home loan, not sure what you should be doing, fixed rates are a big option and should be something you should consider. Surge in overseas buyers could hit property investors. We know a lot about overseas buyers here at Salvo Property Group, and I think it's going to be very interesting as the borders start to open up again. Two states divided by opposite attitudes to tenants. Lucas just made a joke before we joined here that, I think Greg's going to run us through here, but it's pretty simple. If you are in Victoria and you decide to kick out your tenant, be careful, they may decide to go to New South Wales to follow those laws through, or vice versa. Central banks, do they target house prices, and should they? I think most of you that have been on here week after week will know that they don't, but a lot of calls are coming from people, particularly our friendly neighbours across the ditch in New Zealand, have recently introduced new policies for their version of the Reserve Bank to target house prices. Is it a good idea? Definitely not, but we're going to run through that in more detail. All right, to get us started, let's have a look at last weekend's auction results. Fantastic results again. I'm starting to get sick of saying the same thing over and over. 80% clearance week after week after week after week. Those of you that joined us a few weeks ago, I think Lucas ran through the definition of a boom. Doesn't matter whether you're here or not, 80%, it is a bloody boom going on right now, I can tell you that. Sydney is totally out of control. We've never seen that number below 80%. I think maybe the first couple of weeks of January this year, and that would be it. Melbourne has always been the biggest auction market, so you can see what they call a Super Saturdays whenever there is more than 1,000 auctions. And I've given up calling Super Saturdays because they happen every weekend. Every single weekend, we're seeing the high 70s to low 80% clearance. Rest of the country is doing pretty well as well. Fantastic results. I think it'd be impossible for anyone to say that the property market is not going gangbusters as a general statement. All right, let's look at some of these leading indicators. This is from realestate.com and their weekly buyer demand index. Those of you that haven't joined and seen this before, this is just an indication from one of the largest real estate portals in Australia, and it's their own index. It's not an exact science, but it gives you a bit of an idea as to whether there's an increase or a decrease or the long-term trend in demand they're seeing on the website. So put simply, first time it's sort of gone an uptick. Those of you that are seeing on some mobile phone, maybe those pictures will be too small. If you are on the big screen, you can see it's sort of been trending since hitting a bit of a peak at the start of the year, been trending down over the last couple of months, both in Australia and here locally in Victoria. Last week saw an uptick. Why? Don't know. Maybe it's all those first home buyers that realised they'd missed out on the home builder, or perhaps it was the rest of us that were just sick of the fact that we couldn't be a home builder, so we weren't bothering to take it seriously. And now that all that hype is over, we're going to be jumping on the stamp duty bonanza that is still out there here in Victoria. Interestingly enough, we did see a slightly stronger uptick in apartments versus houses. Apartments is the red line. Now, I think a lot of chat's been going on about, freestanding houses as opposed to apartments. I think as those prices get higher and higher, people are going to realise that apartments are becoming a very good option. And I think that's what the trend we're starting to see, that people are realising that houses or a freestanding house in its own right is perhaps no longer affordable for them. What are we seeing from the rental side? I don't know what this means. It's been going down and down since the start of the year. It did increase again along in line with the buyer index by almost 6% in 1 week. I don't know exactly what it means. As I said, I can just tell you firsthand, here at Salvo Real Estate, we have been killing it in terms of the number of leases that we've been doing this quarter. I did just see the results because today is commission payment day. So I saw the size of the checks that I had to write out for all the rental commissions that were there. So I can tell you it is doing very well if you've got a good property manager that knows how to market a property in that side. All right, that's it in the lead up stats. Again, I always like to make sure that I set the scene with a question for everyone. What is more important, information or knowledge? Lucas?
Knowledge.
Good work. So those of you that haven't joined us before, why do I say this? Well, let me just unpack it for you. Information is organised data about something, whereas knowledge is an understanding either through education or experience about that information in its own right. So, it's not just information as it is, it's the knowledge which is important. That is, how do you turn all of that information into knowledge? And with that knowledge, you've got to build up what we call a database of actionable knowledge. Actionable knowledge is important because that's how you have your own database telling you what you should be doing for your situation. So when you see those signs happening in the market, you know what to jump on and do. We're going to talk about a lot more about that throughout the rest of this session. So I just wanted to make sure that I set the scene and you all understand what I'm talking about. All right, so who am I? My name is James Maitland. For those of you that didn't hear the introduction, I am the General Manager here at Salvo. I've helped create more than 11,000 homes for people like everyone on the line today over the last 20 years. On the panel, we're joined by Greg Arbeck, Jack Jan and Lucas Karras. So these guys are going to be answering all of your questions today. Those of you that are new and are not sure how to join or ask a question, down the bottom there is a Q&A section. Jump in, put your questions in there, and I will read through those as the guys are answering your questions. So let's get stuck into it. First up, Greg, I was really interested about what you were talking about the other week. So prices are going up and up and up. So it'd be pretty fair to say that it's getting more and more and more and more expensive. Therefore, it must be unaffordable. But you're telling me perhaps that's not the case.
That is, when you look at it in simplistic terms, that would appear to be the case. But when you look at it in the total picture, low interest rates, government incentives, housing has never been more affordable. So we're not saying cheaper, but more affordable.
So, can you sort of unpack that a bit more? When you say it's more affordable, for the average, listener out there says, okay, well, I had a look at this house 2 years ago and it was selling for $500,000. I went to buy it today and it's selling for 650,000. How is that more affordable? I mean, I'm a simple man, Greg, but surely, I know you're from South Africa, but surely even back in the homeland, that doesn't make sense, does it?
Well, 2 or 3 years ago, interest rates were at 5%, 5, 6, 7%. We're now sitting with interest rates below 2%. So we're looking at affordability. We're not talking about the properties are cheaper. So yes, the values have gone up, but in terms of affordability, you can now get a loan a lot cheaper. So your repayments and everything that goes along with it is worked out a lot cheaper. So it becomes more affordable than it was before.
So let me just see, am I getting this right? What you're saying is that, it's still maybe out of reach for a number of people as to whether they have a deposit saved up or not. But assuming that they do, the overall cost of ownership of a home is comparatively cheaper or more affordable now than it's ever been.
Absolutely. So the cost of money ultimately is a lot cheaper. Therefore, there's on-flowing effects. So the cost of owning a home, as you said, assuming you have saved up your deposit, is a lot more affordable than what it's ever been.
Okay. So, is this having a factor on prices? I mean, is this going to cause prices to go up, down, or?
No, definitely going up. So because housing is more affordable, you've got more people saying, well, let me get into the market. And then I can now afford the property because it is more affordable. Let's get into the market. That is then putting more people into the market, putting more pressure on the market, which then in turn is lifting pricing.
Okay. So the next obvious question, and I was sort of flicking through the chat earlier and I saw quite a few people dropping this in. I know we've talked about it a lot, but I think it's important. The general consensus from most people out there, and the concern, I guess, from a lot of people is that the Reserve Bank, APRA, whoever it is, these authorities that everyone thinks magically are out there that are in charge of house prices, are going to hit the brakes. So is the Reserve Bank actually responsible for house prices?
I would say no, James. The Reserve Bank, I think their duty is to control the inflation rate, not responsible for the housing price.
Okay. So, well, let me ask you this question then. If lower interest rates equal higher house prices, which I think is what Greg was sort of saying is true, but the cost of ownership is cheaper, then if the Reserve Bank increased rates and made them higher, does that mean houses become more affordable again? I mean, is that simple opposites?
That sounds logic, but actually not, I think.
Okay. So if it's not, and can you maybe explain that a bit more to us? Like why?
I think the Reserve Bank, we were all thinking too simple. I think it's the people, they think in the opposite way. If we keep the interest rate higher, will be help to drop the housing price. Actually not. I think the Reserve Bank, they're looking generally for the economy. If they keep the higher interest rate, which is gonna generally affecting our economy, and not only not just for looking the housing price.
Okay. So, Reserve Bank talks a lot about, the unemployment rate. And I think everyone on this panel's had a go at trying to explain this, that, some of the rationale for the Reserve Bank keeping interest rates so low for so long is that they want to see that unemployment come down. They want to see wage growth. So if they were to increase house prices, would it be fair to say that one of these unintended consequences is that unemployment's going to go up?
Yes, okay. Exactly. We'll have a lot of the damage on our economy. For example, like you said, we have the higher unemployment, will stopping our income level, and will damage on the export, and so it's kind of the other big damage on our economy. Not just simply with saying they keep the high interest rate will help to reduce in the housing price. Not like that simple.
Okay. All right. So, let's say that you are able to jump on and buy a house now, or maybe you already own a house, and you're concerned about interest rates. Let's say you do buy into this. are rates going to be going up? You know, I guess the home loan rates that people are paying. Like, if the Reserve Bank says they're keeping them low, that doesn't mean that the actual banks have to, does it?
Yeah, doesn't. But the Reserve Bank has confirmed the lower interest rate will keep in another 3 or 4 years until 2024 at this moment. So we say all the bank have put a lower interest rate, but doesn't mean the bank won't increase the home loan rate.
Okay, so fixed rates, I know have been very popular. I've been saying it a lot. Where do they sort of sit, and is that become more and more popular option for people?
Yes, because this is never has so low risk to be fix your home loan. That appears like the normal people interested in the fixed rate. From the figures I can show here, I can sharing with everybody the percentage of the fixed rate loans of the total issued loan last year was only 10%, but this half year of the 2021 will jump up to nearly 40%. Is 38%, which means from only 1% out of 10 people having a fixed rate, now is 4% out of 10 people intend to fix the home mortgage, the home loan.
Can I take credit for that, since I've been going on all year that people should be fixing their home loan rate? Yes. Can I at least take credit for one of those extra 3 people?
Yeah.
All right. So since I've been a big proponent of that, what are a couple of tips that you can give to people if they are thinking about fixing in and helping us push that needle from 4 out of every 10 to 5 out of every 10?
Yeah.
What are some of the things that they should look out for?
I think we're talking about this topic before. We're still looking, because now I think some people hearing that CBA already raised the 4 years fixed rate from 1.99 to 2.19, I think, last month. Yeah. Followed by the other 11 lenders, they also follow the CBAs and raising the 4 years fixed home loan. But people were thinking, okay, our also concern is in the next few weeks, other bank will or other product the home loan will be raising. So the people now they maybe thinking it's time to rush to get my fixed loan. But I don't suggest you just come in to fix your loan now, because the good news is we'll still got a lot of the competitive bank lender to have the competitive fixed rate on 1 year, 2 year, even 3 years, which is all under 2%. And the next thing is, before you look into fix your rate, or you still have a variable, which is the Australians used to be prefer, the more flexibility, have a look the hidden cost, have a look the comparison rate, not only the advertised rate by the bank, which might you add on more cost if you're taking that the mortgage rate. So have a look which one is more suitable your financial goal, and go for it.
Okay, good. A lot of questions here. I'm struggling to get through them all, so I might just buy myself a bit more time and throw a question out there. I started the start of this session making a joke just to have a go at Greg, that he's the only one on this call so far that doesn't qualify for the new Pfizer vaccine. But with that in mind, vaccinations, whilst it would appear that, Australia, perhaps we've been set back a little bit in where initially we hoped that we'd be, I think it'd be clear to say that the whole world as a whole is generally on the path towards, trying to get everyone vaccinated so we can start to open up international borders again. When this does occur, or maybe, as travel starts to slowly come back, are we expecting to see any impact on, Australian house prices, demand? Is that going to change anything for us here in Down Under?
Most definitely, James. Most definitely, because it will open the gates for the overseas investors to come back into the market, because they've all but disappeared the last 12 months.
Okay, so, I know it's perhaps, a much misunderstood topic for people. So, we hear a lot when things are hot that there's all these residents stealing our property. I don't think when we've seen the stats, it's a very small percentage, even when it was hot, that are actually buying our properties. But I think, you know, when we were talking about this earlier in the week, it was an interesting point you were sort of bringing up as to where these non-Australian buyers like to buy. You know, what types of property do they like to buy, and where their main areas that they focus on?
Look, they definitely want to buy sort of the inner city sort of areas, apartments, because they're after the lifestyle that they offer, as well as the returns, financial gains that these properties offer as well.
Okay, and I assume all in mining towns in Perth?
No. Melbourne and Sydney traditionally have been the two main hubs for overseas investors, with actually Melbourne clearly leading the way.
Okay. So I know we have a few people asking questions all the time that are apartment owners, sort of saying, how come, my apartment hasn't had the same growth as we've seen freestanding houses over the last 6 to 9 months? Do you think that's going to that trend's going to slowly reverse and start to change as we open up the buyer pool to not only just locals, but overseas buyers as well?
Look, 100%, James. It will sort of create more competition in the market. When we know competition pushes up the prices. And a good point here that we need to make is not only the overseas investors, but also a lot of Australians that work overseas that are looking to buy a property back home and have as a base when they come back home one day eventually. Especially seeing how we handle the COVID and how our economy sort of has bounced back pretty much straight away. So these are all good points that don't go unnoticed to the rest of the world.
Okay, good. All right, I'm conscious we're starting to get towards the top of the hour. So Greg, I know you wanted to tell us a little bit about all of these new rules and laws that have come in here in Victoria. What's sort of the most topical one? I know that there's been a lot of chat across the border between New South Wales and Victoria. What are we seeing is starting to differ between the states now? Well,
the biggest thing in New South Wales, you can just evict someone there. You can give them no reason evictions. So if there's certain things that are not going away, or they're on a month by month lease, you can just evict them. Whereas,
so if they're a Bombers fan, is that a good enough reason? Can I say you like the Bombers, get out?
Careful there. You got to if they barrack for Collingwood, that's an absolute reason to get rid of them. If they barrack for Essendon, you look after your tenant very, very much. That's very, very important.
So what you're saying here in Victoria is that it's very different now. We can no longer do that.
Very, very much so. So, for instance, a lot of people, if you were a tenant before and you wanted to get your landlord, and you want to get your tenant out, you can say things like, "I'm going to renovate my property. I'm going to sell it," and these are all reasons to be able to get someone out of the property. Nowadays, you actually got, with the new rules, you actually have to give proof. So, for instance, if I get person comes to me and says, "I'm selling my house," you've got to show proof that you are actually selling it, that you have actually listed it. If you're doing a renovation, you actually could have to even show plans and permits. So it is quite, in a way, a bit onerous.
Okay. All the more reason to have a good property manager that understands the laws and can keep on top of this.
Absolutely. And as we said last week as well, it's always very good. Don't be in too much of a rush to just kick out a tenant. Have a chat to our team, because sometimes it's actually better to keep a really good tenant than just try and chuck someone out and try and get something better.
Yeah, good advice. Lucas, I know you work closely as an assistant for all the property managers, so you'd be all across all these rules.
Yes, most definitely.
Yeah, all right, good. All right, look, as I said, conscious of time. So I'm way behind on getting through the questions. So if you have got a question and I haven't answered it and got on the topic, I will run through this after. In fact, what we'll probably do, we'll hang around for a good 15 or so minutes after we close out the main part of the session, and I'll read through. Or feel free, if I haven't answered your question, just copy and paste it again so it's at the top of the list. and I will run through those at the end of the session. So I'm going to have another crack at sharing my screen and just make some closing comments. Basically, look, the 2021, as I said, we're well into it. We're into the second quarter, and now's really, if ever you were thinking that you had time on your side, you could still think about it. Maybe, should I, won't I, could I? That time's gone. The guys have run through all the reasons why prices are going to continue going up. You've seen that whilst they still are going to keep going up, things are relatively affordable. We didn't really touch on too much of your investor. Let me just recap for you if you were concerned about that. You're still going to have low interest rates, that lower cost of ownership. And sure, rents are down a little bit at the moment, but we've talked before, those temporary rules that have been around for the last 12 months have gone. So you're going to see that rental growth start to come in over the next few years. But if you take up one of those fixed rates that Jack was talking about, you can lock in those ultra low holding costs and enjoy that rental growth. So, anyone that's out there with money in the bank, you'll know that you're getting all of about 0% on that. So, having a residential investment property is a pretty good yield play right now. So, what do I want you to do? Well, simple. You can do three things. That's the way that I see it here. You can take on board what I've said and ignore everything I've said and do absolutely nothing. Now, that's fine. I won't get offended. Jack's made me feel good today by saying that it went from 1 in 10 people having a fixed home loan to 4 in 10. I feel like taking credit for at least one of those extra people. But let me just put this to you. If you don't change anything, then you're going to continue to get the same results. So if you're happy with the home you've got a couple of investment properties, you're doing pretty well, you've got multiple income streams, then great, I'm really happy for you. And perhaps we couldn't help you. But if you are looking to move forward and you do want to change 2021, you want to turn it around and you want to get in the property market, then you've got to make a change. So there's two ways you can do that. One, take on board what we've talked about today and do it yourself. We talked about a lot of things. Join us for a few more sessions. We'll run through some more tips and how you can do it and really think about what we talked about, actionable knowledge. Everything we talked about today all had, an underlying thread as to what it meant and how you could use that for your process. But what I really hope that you do is that you do it with us. So, how can we help you? Well, the most active and I guess the most dedicated way is to catch up one-on-one. So what I've done to make this happen is, there's nothing worse than everyone being busy. So I've fixed time in everyone's diaries over the next week just for these particular catch-ups. So no one else can jump in. There'll be no sales inspections. There'll be no rental inspections. We won't even have a sales meeting during these time periods. They're dedicated just for you guys to jump in because I know a few people have said to me they've tried to get in and all the times have been booked out. I've made sure there's plenty of time there, but do jump in and get it quickly. So if you're not sure what this will involve or if it's right for you, well, it's really, really simple. We're talking about either a 15 to 20 minute catch up. You'll meet up with one of the guys. Either we can do it virtually like we're doing now on Zoom, or you can come in and meet face to face. Have a bit of a chat about the market, talk about where you are, what sort of plans that you've got in place for your future, or really what you're just hoping to do. And if you've got no plans and you've got no idea, that's okay too. And then what we'll talk about is what the next steps might be as to how we might be able to help you and whether you're the right fit for us. So, look, not everyone's going to be the right fit, but if you got value from today, then I think this is really a great next step. Those of you that aren't sure, is this right? As I said, maybe you're not sure what you want to do. Maybe you don't have plans. Well, it doesn't really matter because ultimately what we're looking for and the people that we can help are those that are focused. You're prepared to take action. You're prepared to roll up your sleeves, get involved. You understand the importance of what I've been talking about with actionable knowledge, and you're prepared to actually do the work. So that's all we ask from you. It's not a lot. And if that sounds like something you're prepared to do, then I can pretty much give you a guarantee that we're going to be able to help you wherever step you are in your home ownership journey. If you're excited and you want to know how do you do it, I'm sure you are. Really simple, 3 ways. There's either a link in the chat, click on that, and we'll go straight through to the booking page and grab your spot now. Those of you that join this browser through, or this webinar through a browser page, that should have been redirected and you'll see the booking page now. And the third option is if you're busy, don't have your diary with you, or you don't like any of those options, I'll send you a follow-up email after this with a link to do that. Those of you that are joining us on Facebook, none of this will help you. I am talking to those of you that are live here in Zoom. So you can do one of two things. Either join us live in Zoom and all of these options will work for you next week. Alternatively, we will send a follow-up post on the Facebook with this link to book in for your session. So wait for that. All right, as I said, it is the top of the hour. I've kept it pretty tight this week. I've been accused of going well over time in the past, so I'm only a couple of minutes over. Thank you very much for everyone that's joined us live today, whether you be with us here on Zoom or on Facebook. As I said at the start of this session, I know there's a lot of things that everyone could be doing. You're all busy, so I very much appreciate you giving us your time and dedication today. So from me and everyone on the panel, thank you again, and we look forward to hopefully seeing you next week, next month, or next quarter. As always, we will be here 2:30 every single Wednesday, rain, hail, or shine.